Eric, good morning.
Craig, good morning. Good to be here again. We keep hoping, these last few weeks have been a little trying for us all, but as you know, we always expect it will get better, and typically does.
Typically does. And just a reminder to everyone out there, this weekly wrap-up is brought to you by SPROTT Money, an accredited Royal Canadian Mint bullion DNA dealer. Please visit SPROTTmoney.com to learn more. Eric, you hit it right on the head. It has been a very difficult couple of weeks. Silver declined. I don't think I've ever seen anything like it. 16 days in a row, almost straight down at a 45-degree angle on the chart, but it seems like maybe things are getting a little bit better. What do you make of things right here?
Well, I read an article that there's some options that expire on May 15th, which I guess is this coming Monday, and at the strike prices, they'd like to not have exercises around 1620. And so even though nobody seems to be able to explain why the price went down, it would seem to me that it was just the commercials doing their thing, sweeping the table and getting ready for the next time. And one of the technical people that I respect a lot suggested 2 days ago that we have an exhaustion buy alert on silver, that it should have begin a bit of a rally here. And of course, with all the things that you and I discuss that are going on in these physical markets, we have lots of reason to believe that things should get a lot better for us here, and we'll talk about that in due course.
You'll like this one, Eric. Technically, from a technical perspective, I suggested to folks on my site that when the length of your decline in consecutive down days at 16 reaches your RSI on the charts at 16, you're probably pretty close to a bottom.
Yeah, I would say an RSI of 16 is certainly there, right? I think they even say that if you get below 30, it's kind of time to start thinking about buying things. So, and I think that, as we'll discuss the things going on in the world, there was really no reason for silver and gold to go down here. You and I will talk about the economy here, and here we have what we have: retail sales up 0.4%. They were hoping for 0.6. Inflation is still there at roughly 2%, but there's so many signs that there's no recovery going on. Whether it's auto sales or Macy's store sales yesterday, it's not there. And of course, these healthcare premiums. I always go back to that. I hear about these, suggested 80% increase in premiums, or the guy's doesn't want to sell it anymore because he can't make any money. Well, if the insurance company can't make any money, what would the rate have to be for him to make money? Mm-hmm. That's a sort of a shocking thing to have to contemplate, and it's of course everyone's almost biggest budget expense now, healthcare.
Yep.
So you can't have double-digit inflation and those sorts of things, and not think that people's discretionary ability to spend on a discretionary basis is going down. And I think we see that now.
Well, I think the Fed probably likes it, Eric. That adds about 1% to GDP every quarter, all that healthcare spending, and it's certainly helping their inflation mandate. So,
yeah, right. Yeah, I know. It's kind of funny to look at it that way, isn't it? Because if you look at some elements of GDP, there's lots of them that really shouldn't be included in GDP, right? When you think of healthcare, are we actually getting healthier? No, we're not getting healthier, as a matter of fact, right? The average age of life is going down in the United States. I think the infant death rate's gone up in the United States in the last decade. So we spend all this money and we're less healthy, for goodness sake. Diabetes is going crazy. So, we don't have much to show for it yet. It goes, as you say, it goes into GDP. Everything's great. GDP is going up. Yeah, well, thank you. People being less healthy should hardly be going into GDP. And security. Imagine the money we spend on security. Man, it's just gone crazy in the last 10 years. Ever since that guy supposedly was going to light his running shoe on the plane, think of the money we've had to spend on security and the time wasted. Oh, it's shocking. You have to think about it.
Right. Well, I know my life expectancy has been shortened after these last couple of weeks, and my health has declined. However, there does seem to be a little bit of a light at the end of the tunnel, my friend. And I want to get your thoughts more specifically on the miners, because, we've got this whole thing hanging over everyone's heads with the GDXJ, and the shares had a really tough couple of weeks just with the metals. However, the HUI index bottomed at 180 last Thursday, the 4th. And it's going to be up again today because the metals are up. It was in 194 yesterday. Do you think there's a chance that sentiment has finally kind of been washed out and can maybe only improve from here?
Well, I can understand why the shares are going. Let's imagine that the reason the shares went down was because somebody took them down intentionally. If I was that guy, I'd be buying the shares before I let the price of the metals go back up. That's the tip-off, right? You go in and you buy the shares because you know full well that the price of the metals is going back up again, so you're going to get super torque on the shares, so you go and buy those first before you come into the COMEX and buy the metals. But there's no question that, in my mind, the value's there. I watch lots of companies and I see mostly good things happening to them. Some of them aren't as good as they could be, particularly some of the bigger guys have had a tough time keeping it together. But I think there's some incredible values out there when I look at various stocks and think, well, why would that be that cheap? Even now, I can hardly believe it, that there's a fundamental reason. I think, man, that stock should be twice as high as it is. So that sort of thinking tells you that you're kind of getting down to a point where things, as you put it, they are washed out. So, and I've been there before. I was reflecting on sort of going back to early in 16 when, man, there were no bids on anything, and you'd bring out some good news, and the stock wouldn't go up, and you think, like, there's no market anymore. Well, then all of a sudden, of course, the whatever it was, 19th in 2016, things just started rocking. The next thing you know, you're up 150%. So I would guess that we've seen the bottom here.
Yeah, you and I talked a couple of weeks ago about whether you can measure capitulation simply on price or if you can measure it on sentiment, which also is obviously always connected to price. And boy, it sure seemed, especially after what happened late last year and then this latest pullback, that we almost had a capitulation in sentiment, didn't it?
Yeah. And, you mentioned the GDXJ situation. And, of course, they might very well have shot themselves in the foot, right? Because they changed the GDXJ to GDXM mid-cap. Mm-hmm. But people want the J. They don't want M. They want J. And so people have, not only is there going to be a re-rating of the stocks that are in it, but people are selling the GDXJ. They're net selling. So now you got a double dip, right? Yeah. Not only are they going to change the makeup, but on balance, they have to be selling positions. So it has gone further than we all might have imagined, and maybe there's even still some pressure left. We'll see. But we have to find other things to replace the GDXJ, which I know some people are buying the SPROTT Small Miners Index, and there'll be other things to buy. But when you go from J to M, you lose your audience, unfortunately. So we'll have to see what happens there.
Two other topics this week, Eric, and then they're ones we usually cover almost every week here. First, let's talk about politics, especially here in the U.S., because as soon as Trump was elected, the narrative changed about how bullish this was for the stock market and everything else, because there was going to be massive infrastructure spending and tax cuts and all this stuff. Boy, it sure seems like all that stuff. we've come to a full stop down here south of the border, Eric, with everything else going on. Do you see it that way?
Well, you mentioned the word narrative, and I love the phrase narrative follows performance, okay? And I'm certainly of the view that you may very well have had the plunge protection team in there after Trump got elected, and I think the market was down about 8% or something overnight, and the plunge protection team came in, turned it around, and all of a sudden the narrative follows the performance. Trump's good for the stock market. He's good for the economy. And now, to your point, we're seeing such volatility of opinions within the White House. We like it one day, we don't like it the next day, and we're back and forth. And oh man, it just seems chaotic to me. I wouldn't want to have to try to figure it out, to be honest with you. Okay, that is, I don't know. I don't know whether we're draining the swamp. I don't know whether we're working with Wall Street, we're working against Wall Street. I have no idea anymore, because we seem to get different messages all the time, and the things that he stood for, whether it's the wall or the trade stuff. It all seems to have been pushed back under the carpet here, and nothing's happening yet. Yeah. So, yeah, it's a mess.
It all leads to uncertainty, which makes you think, well, that might definitely trickle down even more into the economy, slow things down even further, and this whole rate hike scheme, everything else might be thrown up in the air.
Yeah. Well, even, you mentioned on a chat before the call here, Home Capital up here in Canada, which is a sort of an alternative kind of bank that's in the mortgage lending business, and it's an example that all of a sudden, the few people got a sense that it wasn't working, and they just take their deposits out so fast that they lost like $1.5 billion in 2 weeks, something like that, and the stock fell by about 80%. But that's what can happen to lenders. You know, when things start getting soft, and there were all these expectations it's going to be great, and then you find out it's not great. And then you do start thinking about where you have your money, and is that guy going to make it? Does he have a derivative position, et cetera, et cetera, et cetera? So, and that's a very healthy environment for gold and silver.
Mm-hmm.
I mean, that's when really they stand the test of time.
Yeah.
So I agree.
All right, one last question. You know, we talk about gold demand every week. We don't necessarily see it reflected in the paper markets, but the physical stuff itself sure seems to be a hot item. You and I were both pleased to see a great article this week from SRS Rocco about a big 50% increase in 2017, at least in January and February combined, of gold exports from the U.S. And I know you track that. You track exports from England, exports from Switzerland, and then imports into China and India. Yeah. What do you, I'm sure you're watching these trends. What do you think?
Well, of course, I'm always amazed. Let's take the U.S. and England as examples. I mean, it has no gold production. So when there's a big chunk of gold leaving the U.K., you got to wonder, well, where's that coming from? And, of course, you're always thinking, well, it could be some central bank selling that goes unrecorded because it's leased to the dealer, and when they lease it, they don't have to say they sold it. Same thing with, you see the big exports from Switzerland into India. Of course, Switzerland doesn't produce any gold either. And same thing with the U.S. when they shipped out 100 tons in January and February, but they only mined 80. And you got to presume that some of those 80 would have been consumed within the United States. So, who was coughing up, who knows, 20 to 40 tons in a 2-month period? And probably the most important data point was the preliminary numbers out of India, 98 tons for the month of April. The last month was, I think, 110 or so. So we're running at 100 tons a month. I mean, that's 1,200 tons a year. Last year was 650. I can't imagine somebody could come in and buy an extra 550 tons in a roughly 4,500 ton market without the price going a little higher.
Yeah.
And or where's this coming from? Who's providing that? That's central bank type size, right?
Right.
A difference of 550 tons. Somebody big's got to provide that. So no, I think all the signs of the physical market have been quite positive. And if this market wants to get a little bit of weakness here, I think the stocks and the price of metal will run pretty hard.
Yeah, the in the Far East, as we call it here, India, China, they take advantage of the sales, don't they?
Yeah, when the price comes down, they're buyers. Yeah, and they bought very wisely.
Yes. And Eric, I was just thinking I should correct you on one thing. In Great Britain, they do have gold. They got that little Irish guy in the green suit. He's got that pot down there at the end of the rainbow.
I forgot about that guy.
Yeah, exactly.
That's where it came from.
Exactly. They can hit that anytime they want. So.
They're right. Yeah.
It's emptying though as well, and it sure presents an interesting situation.
It does. It should be looking good here. That's the one thing we always get to fall back on the physical side of things, notwithstanding what happens to us in the thing known as the COMEX, where the paper just eviscerates us. And good for you and guys like Steve St. Angelo to stay on top of it and report the developments there, because it really is manipulation, and it happens so regularly. And it's amazing that the hedge funds get fleeced every time. Maybe their day will come. Let's hope so.
Yeah, let's hope so. All right, my friend, thank you so much for your time and all that you do. And we will talk again next week.